What's up guys, welcome to another video. The Bitcoin chart has been giving us a consolidation within this pennant chart pattern. We'll be having fake out to the downside of the trend line and testing the resistance multiple times. At what point will we become bearish in the short term or continue the move to the upside? On the daily time frame, we've broken out of our inverse head and shoulder chart pattern, of which the target is the level of $34,000. But as we approach this level, we are facing a rejection at the level of $28,500. We will see choppy action at this level and see a rejection to come back to test this resistance level as support, the level of $25,170, for a healthy uptrend to continue to the upside. Sit back and relax as we delve into the charts. Welcome once again to my channel. My name is Williams. I make technical analysis on the Bitcoin chart. So if that's all you're here for, smash the like button. Let's get this video to about 100 likes. Diving into the Bitcoin chart on the 1 hourly time frame, we can see we are consolidating in a pennant chart pattern. This chart pattern could either break either to the upside or to the downside. It's a 50-50 chance that we'll break either to the upside or to the downside. But as traders, we are not gamblers. Rather, we'll wait for the market to give us a break of structure. We can see that we've come to test this trend line many times. We even had a fake out below the trend line, and we are back into the pattern, the chart pattern. But what are we waiting for on the 1 hourly time frame? We are looking for a break of structure. As we are consolidating in this pennant, we are forming highs and higher lows. We are coming back to test the highs, and we are creating higher lows as we are going up. So for this one, this is our last higher low. The level of $28,100 was the last level in which we formed a higher low. So if we are having a break below this $28,100, then we can entertain a trade to the downside. As the market is giving us higher high, higher low, higher high, higher low. We've seen so many choppy actions at this level. So we need to see a decisive break below the level of $28,100 for us to say the market is going down. On the 1 hourly time frame, on the short term, if we're having a break below the level of $28,100, a clear break below the level of $28,100, this chart pattern could actually take us from the width. It will take us as low as this trend line. So we're having a break below this level. This trading setup could take us as low as the level of 26,852. So we are having a clear break, a clear 1 hourly close below this level. Then we can entertain a sell position as it shows weakness on the part of the bulls and the bears are taking over as we are going lower. But on the upside, if the Bitcoin chart is giving us a clear 4 hourly candle close above this our trend line, our resistance trend line, if we are seeing a clear 4 hourly candle close above this our resistance trend line, then we can entertain the move to the upside. Remember, we are having resistance at this level between the level of $28,588 down to the level of $29,400. So we do not want to enter the market at this level, rather we want to enter the market at the beginning of the breakout. So if we are seeing a 4 hourly candle break above this level, the level of $28,500, then we can entertain a move to the upside. All along, we've been facing rejection. Remember, the more time you test the resistance level, the more likely you are to break it. So if we're having a break above, we come back here to test it, and we see a 4 hourly candle close above the level of $28,500. We can entertain a trade to the upside for a quick scalp on the 1 hourly time frame again for the move to the upside using this our trend line. So with this trend line, a break could still take us down to the level of $29,600. Above the level of $29,600, that's the level of $29,686. Overall, we should not forget that on our inverse head and shoulder chart pattern, the target is as high as the level of $34,000. Let's not forget that in a few hours from now, the Fomc, the Federal Open Market Committee, will have its press conference by 7 p.m. Nigerian time. There, we'll talk about the interest rates. So at that point, we should expect some measure of volatility in the market. That's why we need to wait for confirmations in our trade. We want to wait for the market to either give us a clear break above, below rather, the level of $28,100, or we're having a clear 4 hourly candle close above the level of $28,500 rather. So these are confirmations we want to wait for our trade so that we're not going to be taken out in a fake out either to the upside or to the downside. Don't forget the market has been giving us fake outs prior times and coming to test this resistance level. So this time will not be a surprise. Time frame, we spoke about this inverse head and shoulder chart pattern unfolding in our previous video, which was released last week Friday. There we're seeing this as the shoulder, then this as the head, and finally this as the other shoulder. We had a clear daily close above this our resistance level, which was the level of $25,160. In fact, we can say that the market gave us an impulsive candle move to the upside. So we had a clear breakout from this our inverse head and shoulder chart pattern, and the move is to take us as high as the level of $34,000. In that video, I spoke about a 4-hourly candle bearish divergence, which I expected will bring the market down to our support, which is the level of $25,160. If you missed that video and want to learn about bearish divergence, you can check the link at the top. As we approach the level of $28,500, let's not forget that the market needs to give us a retracement to continue the healthy uptrend to the upside. So we can expect the market to come down to the level of $25,160. But all that depends on what happens in our pennant structure that we analyze. If we're having a breakdown to the downside, we may see the move coming as low as the level of $25,160. We are still bullish in the long term, but just bearish on the short term. Let's not forget that in a few hours' time, we'll be seeing volatility from the FOMC news. We need to wait for confirmations as we take our trade. If you enjoyed the content thus far, smash the like button, help this video to get to as much viewers. And if you're new to the channel, subscribe to the channel, turn on push notifications so you'll be updated when I enter my next trade. Thank you very much for sticking with me through this video. See you in the next one. Bye-bye.